Not all 0DTE days behave the same, and neither does the market into the close. Some weekdays quietly outperform while others carry hidden risks. And in the final 15 minutes, the S&P usually stays calm until it doesn't. Stay tuned to see where timing really matters and why most traders miss the edge hiding in plain sight. All right, so this one goes back to May, the days of the week with 0DT. So we're isolating specific days here. Next slide here. So how have 0-day trades fared on various days of the week, and what insights can we glean from these differences? And the setup for these is we sold a daily iron condor, so this is in 0-day options, 20 delta for the short options, going $20 wide, entering it at the market open or at 9 a.m. So in the first 30 minutes here, winners close at 25% of the max profit, all others allowed to expire. What do you think is the best day?
I mean,
you know the worst day, right? You remember that one?
Yeah. I mean, the worst day of the year?
No, of the week.
Oh, the week. Oh, Thursday is the worst day of the week to put it on.
Yes.
We know that. I think closing the winners is going to be the profit, but I don't know. A lot of the times I've been watching them on Twitter. They hold these things into expiration, but they don't stay with our mechanics. They a lot more aggressive with their rolls, which was something that we would definitely do. Yeah. They add to positions, which is another thing that we don't usually do. But I mean, you have to be highly capitalized to do this. I'm going to say the 25% just as a whole if you're just doing one.
Yeah. Well, what day is the best, you think? Which day of the week?
Monday, I think, is the best day of the week. I think Thursday's the worst.
He does listen.
Yeah.
Next slide here.
Of course. Hey, what day is today? And it's worked out real well. And did we do something? No, because I told you I don't think it was the right thing to do. Never think, just trade. Okay. I tell people this all the time. Don't think, just trade.
Yes.
Sorry.
20 delta iron condor sold at the open. Overall, you can see there it's been a high win rate. You have a pretty decent average P&L here. Your CVAR is about $1,600, and that's just like because that's roughly your max loss, and you're doing these as iron condors. You can see overall Monday is the best performing day by far. Actually, Monday and Wednesday really the best performing days. Tuesday, Thursday, you get a little bit dicey here, and then Friday is kind of inconclusive as well. So the Tuesday, Thursday, Friday are kind of your 50-50s. Mm-hmm. Monday and Wednesday have historically, and this is only 2 years of data, so take that with a grain of salt. But Mondays and Wednesdays, the best performing. Thursday, by far, the worst performing there. And I think that's sort of a function of like, in the middle of the week, you have a lot of binary events. So Monday, you usually have like the weekend, the weekend move is digested on Monday. And as we see today, having a lot of chop. Tuesday, Wednesday, Thursday, you have a lot of earnings that come out. You have stuff after the market closes that moves markets in one way or the other. So you can see here across the board, win rate high for all of them with a positive P&L. So this strategy has been a solid one.
Has been a solid one. Totally agree.
Yes. You do increase pretty much everything, though, on the next slide here by doing it, and this is just at the open. So when you wait a little bit, when you wait like the 10, 15, 20, 30 minutes, you do get better win rates and better entries via our backtest. I mean, you can see all the numbers kind of go up with this. Even the losing trades on Thursday increase as well there. But I think it tells you a little bit about, the liquidity. You're probably getting tighter markets, once you wait a little bit.
These numbers look so good. You almost have to say, why isn't everyone doing this? But I'm going to caution you because I get the emails from people, and a lot of times I got to take that with a little bit of a grain of salt because you don't get as many winning emails. You get that more on Twitter and other places like that, or X, whatever it's called now. but you get more of the, like, I don't get, like, you sell a put and you buy it back. You don't get that email, hey, this worked, it was great kind of thing. You know, you sell a call, it goes down, it works. You futures scalping, it works. You always get the ones that
I got too big. And
I got too big, or what can I do now kind of thing. Even those who've had profits in other trades, maybe in 0 days, they don't write about the, you know, hey, this was easy. It's always, what can I do? So I will caution you that your timing on these, especially if you're undercapitalized, is nirvana, and there's no way to pinpoint that, because I've had people with lower sized accounts try to ramp up their accounts, because they'll write me. It's a process. They'll write me and say, you know, I love what you do, 45 days, but you know,
boring. I want to make more.
I got $10,000. I want to
make 100.
You know, so I say, well, then 0 days might be the place, you know, for you to go. I mean, if you're looking to ramp up your risk and ramp up your profits and ramp up your losses, that's the place to go. And they'll do it on the 1 or 2 days prior to, or the first day that we have a huge move. And most of the time, you know, they can't use more buying power, so they're not rolling anything down. They're pretty much setting it, forgetting it, and stuck, and they take full losses. And, you know, it basically makes them too gun shy to ever do it again. Or they don't, you know, they hate the strategy, it didn't work. So I will say, you have to give the process some time, and it's for the accounts that are, you know, $50,000 to $100,000 in nature, where you can take, you know, a 2-day loss in this strategy to make 3 or 4 or 5 days to get it back and stay in the game. Where in a smaller account, you can't afford to roll up, you can't afford to use more buying power. You can't afford to be wrong on day one. It's the old saying about everything on the floor. Even, like, you know, you asked me earlier today about being a floor trader. You know, you had to be profitable in your first month of trading, or you didn't get a second month of trading because you didn't have the capital to sustain it. I started with $5,000. If I lost money, I didn't have enough money to pay my seat lease the next month. So it was not a matter of you know, sustainability. It was all or nothing, and this 0-day strategy is all or nothing. And it can be, I've never done crack cocaine, but I assume it can be like crack cocaine, where you really get used to these profits and how easy it can be until it goes wrong.
Yeah, and then you size up, and that goes to what we talked about with Jim. It was like, you know, you start getting too big because it's free money, and then one thing goes wrong, and now you're you know, get spanky pooed.
Yeah.
You gotta be careful.
So that's because I see 90% overall wins, and I'm all in.
Yeah, you gotta be careful.
Yep. Next slide, please.
But the takeaways we'll explain. CVAR remains almost identical across days and entry times, showing that tail risk exposure was extremely consistent. So if you are having losses, they're usually full losses. Like, there's not a lot of wiggle room here. And that goes to what you were talking about, of like, you have to be able to have that string of, you know, couple days, week, 2 weeks, where you're losing all of them. And that's a hard pill to swallow. Profitability varied. So Mondays were the strongest day overall. Tuesdays and Thursdays underperformed relative to other days. So over the testing, it's been Monday has kind of been the best day across the board.
We missed it.
And we missed it today.
You got to send like a calendar alert every Monday.
A reminder, today's the best day. All right, next time.
Simplify.
Yeah.
All right, let's take it.
No, we got one more. 2. Remember?
Oh, that's right. These are doubles. I forgot. Thank you. I'm old.
It's a lot.
I appreciate it.
There's a lot going on. Mm-hmm. The last 15 minutes of S&P 500 performance. What do you think? Last 15 minutes. Up, down, inside, outside.
We're at all-time highs. It's got to be up, I would imagine.
Let's take a look.
Could it be inside? Darn.
Yeah, it's going to be inside. So this is a distribution of the last 15 minutes of price action. You can see it is fairly normally distributed. And it's relatively tight. So 85% of the time we're in a 0.25 percentage range. And so this is in the last 15 minutes. So that doesn't seem like a lot, but it can be like 10, 15 handles is kind of your range here. When we get over to the next slide here,
So just by seeing this right now,
it doesn't tell you anything. It just tells you that we're inside.
which
Sometimes up, sometimes down.
So let's extrapolate out here. So if you're putting on 0-day trades in the last 15 minutes and the option pricing, and you believe the option pricing is telling you what the expected move is, and this is showing you that the expected move is inside that volatility cone most of the time, putting on trades 15 minutes before might seem like you're risking a lot of money to make a little bit of money, but the numbers play out.
Yeah.
Okay. Especially if you manage a little bit early. So maybe that's even a little thing you can do. But you gotta be careful. This is really flirting with death.
Yes.
Go ahead.
Next
I would
slide.
hate to do this.
Yeah, you got to be careful.
Yeah.
Careful.
Well, be careful. I mean, you have to be profitable because you can't be any more careful
Small.
or small. Yes.
That's the key here. And we're looking at SPY here. So for the last 15 minutes, 48% higher, 50% lower, 1.5% were basically unchanged. So it's exactly 50-50. There, it feels like, and back in prior years, prior to COVID, it felt like the last 10 minutes was a 5-point rally every single day. Mm-hmm. In our back test, it's basically 50-50. There's no trade here is kind of, I think, the key here. Next slide. So we looked at the number of outlier moves. This kind of gives you the, you see this pretty clearly that the summer months, the middle of the year, are kind of your, that's when things kind of dull out. Mm-hmm. You can see here, June, July, you really don't have much craziness that happens in the last 10 minutes. A lot of that has been structured towards the beginning part of the year. Going on to the next slide here, we did this by day. So you looked at outlier moves per day. So Tuesday has the smallest median percentage move for the SPY in the last 15 minutes. You can see here across the board, they're all kind of consistent, but Tuesday, for some reason, has been the tightest range at the last 15 minutes. I don't know if you take too much from that.
No, I don't think I take too much.
It's a cool, it's an interesting fact.
Yep. Interesting fact.
So a couple takeaways. Tight and predictable ranges. So SPY stays within a very narrow band in the last 15 minutes most of the time. Outliers are rare. The large moves happen about 1% of the time, but can be big, of course. So you want to use defined risk. And this last 15 minutes, as you talked about, it's great for non-directional strategies. You just have to keep in mind that, it's small. You're picking up pennies in front of a steamroller.